You have some big news today. Can you tell us about the news?
So as part of our 2025 goals, which is the third set of 10-year goals, we have a renewable energy goal, and we announced today that our partnership with NRG down in Texas, where we have our largest industrial facility, will go ahead and expand the use of wind power from what we had originally said was 350 megawatts. We're going to add another 150 megawatts to make it 500. So we've achieved in 1 year our 10-year goals in using renewable energy here in the United States. So we're actually going to go ahead and increase our goal to 750 megawatts, which will be,
by 2025.
By 2025. So this big announcement today, it's affordable energy. Large industrial complexes like ours are great base loads for wind energy. Of course, there's a lot of wind down there, and of course, makes it more affordable for the grid.
But are you doing that because of price, or are you doing that because of a commitment to renewable energy?
But yes, I mean both. Yes, I mean affordable energy and transitions to affordable energy, multi-decade technology bets, and we're a great believer that renewable energy, with the goals that we've got for greenhouse gas emissions out of COP21, we're a subscriber to those goals, that we've all got to work towards them. There'll be price points. Those price points will become, in the case of wind, very regional. There's great price points down there if you base load like we have. So it's a win-win. We work to base load affordable energy for that region. It's not transferable across the US, but of course solar and other things will be.
2025, what percentage of your energy consumption will be renewable?
Yeah, so we're building that number up to be about 30 to 40% of our total total energy mix in the company. We've been reducing energy intensity in the company since 1995, and we've in absolute terms, I think the announcer said we're a $49 billion company. In 1995, we're maybe a fifth of that size, but we're using 80% of the energy we used back in 1995. So we've reduced absolute use of energy through efficiency and through making sure that we become, in fact, less energy intensive through better technology.
So that's a big accomplishment, clearly, but there's talk at this conference about weaning ourselves off of carbon fuels. When does that happen at a company like Dow?
Well, never. Never's, I won't use that word, but I think we've got to reframe the debate. I've heard people say fossil fuels will be out of the mix globally or even the US by certain timeframes, 2050. We can't see that. I mean, I think the way we think about fossil fuels is, we've been given the lightest fossil fuel possible in natural gas. So at best, we're going to be transitioning from the heavy emission-intensive fossil fuels, coal and oil, and if we can transition to natural gas, where natural gas exists, but actually with LNG becoming a reality, global trade in gas will become a reality, we can de-intensify the amount of carbon we release so we can hit the 2-degree goal that the UN has put in place. And if we can do that by 2050, at Dow, we're globally around 70-75% of our fuel mix today is natural gas.
Natural gas already. But so 2050, what percentage of your fuel mix will be fossil fuels?
Well, between alternatives, growing to 2025 goals, growing as we just with this announcement, we should be able to get our fossil fuel intensity down to less than half.
Less than half.
Less than half, and all natural gas.
Yeah. So let's talk a little bit about the Dow-DuPont merger. Very big deal, a big event. Both companies devoted to science, historically devoted to long-term research and development. There was a column in the Wall Street Journal the day the deal was announced by my former colleague, Dennis Berman, that was headlined, "The End of Ambition," saying, you're responding to pressures from short-term investors who want to get their money more quickly, that the result is going to be a cut in long-term R&D and a focus on short-term wins.
Yeah, and I disagree with that premise, but the deal itself is structured to actually increase R&D investments. But to be a public company today of the scale and size of our two companies, what the realization is that you can't ramp up R&D in multiple marketplaces and get short-term returns. In other words, to obey the law of short-term returns begets long-term returns. In long-cycle companies, you've got to basically go pure play or go as close to pure play as you can get by ramping up our R&D in key markets. And so what we've been doing at Dow and DuPont is taking that science, committing to R&D, but saying, look, you know what? agriculture needs its own technology. We just heard a discussion on that technology, and that particular arms race in R&D is best done in single-focused companies.
Yeah, so let's be clear about
that's a good example of taking the two and putting the two ag businesses together and being pro-competitive in climate, in data, in chemistry and biology, which takes a lot of money in the short term.
Let's be clear with people about what's happening here, right? You merge these two companies together, and then you break them apart into three focused companies.
Yes.
One in materials, one in agriculture, one in specialty products.
Versus two companies doing everything.
Versus two companies doing everything.
Yeah.
Total dollars spent on R&D will decline.
Actually, only decline because of duplicate R&D, but with time, it'll incline.
But more focused.
More focused, and so, for example, we at Dow, our R&D budget in agriculture, roughly $750 million, most of that went into chemistry and a little bit in biology. Yeah. Exactly the opposite for DuPont, right? So when you put the two together, you'll have some duplication in biology, some duplication in chemistry. That'll be taken away. But then you'll scale up both of those.
Both of them.
Okay.
Do you miss the opportunity to find longer-term breakthroughs where biology and chemistry intersect?
Well, I'm a great believer, as you know from previous discussions, on those intersections is where most of innovation's occurring today. And the answer is no, because you'll become very focused in capabilities. We can talk about material science in a minute, but in biological science, genomics, germplasm, traits, how to actually create environments for food and feed so that you can get from farm to table fresh. And that whole conversation we just had there isn't just a biology answer, it's a chemistry answer. And one of the great myths in California, I'm in dangerous territory by saying this, organic is a chemistry term. So organic still involves chemistry. I mean, fertilizers still occur organically, they're chemicals, okay? So just the branding of that is one thing on its own right. But chemistry and biology together, Mother Nature gave us ways of doing that, but we have to discover how to unlock Mother Nature's secrets so we can do more of it for 9 billion people by 2050. So farm efficacy, supply chain efficacy, food efficacy, getting things fresh and not wasted needs deep science in those capabilities, and that toolkit the new agricultural company will have. You'll have Hugh Grant here later telling you much the same thing when he talks about Monsanto.
And looking forward to that, and I know there are people out here who want to ask questions, and I'm going to open it up in a minute, but I just want to make sure that I understand this, because what we've been talking about here for the last 24 hours are really big, difficult long-term challenges. Yes. The challenge of the energy transition, the challenges of feeding a population of 10 billion people with middle-class appetites, the farm, a warming climate and what that does to agriculture. Those things can't be addressed on a quarter-by-quarter basis, but you're going to have a bunch of companies that are out there in the public markets. Are you worried about that?
Well, look, if we could, you'd scale with private capital. Okay.
You'd prefer to be?
Well, you'd have to, because the 90-day march through quarters is ridiculous. I would go on record and say that. So you've got to actually elongate your investment horizons, and private sector companies can do that. But the problem with private sector companies is they haven't been able to get access to capital, which is why you have public companies. There's a balancing act in there between short and long term, which is for a longer discussion. We at Dow believe, and DuPont, we believe we can scale by going narrower and deeper, and do both short and long cycle together. That's our challenge. In the introduction to myself, there was something that was said which is very important to answer those big challenges point you made. Maybe there's questions on this. We are firm believers that humanity's failing in getting answers to these big challenges because we're thinking of subsidy versus incentive. We're thinking that we have to get technologies out there and see whether they succeed or fail. What you've got to do is actually back off and value nature. Humanity has a policy failure. We don't value water, we don't value air, we don't value forests, we don't value land, we don't value oceans, we don't value anything that's on this planet. We put regional dynamics in place, from councils to state jurisdictions to federal, and they try to administer this very complex pricing model. So what we at Dow are doing, working with the Nature Conservancy, is finding mathematical models to actually put in place the value of nature, so that when you locate a building, like this hotel, chemical plant, doesn't matter what it is, there's an impact to your financials, short, medium, and long term, that changes your decision. And so instead of gray infrastructure, you put in place green infrastructure. We have 3 examples of that already that we put in place this last 2 years, where we've avoided gray capital infrastructure, wastewater treatment plants, $40, $50 million, by using existing wetlands and preserves to manage wastewater, for
example. Ultimately putting a price on nature, like putting a price on carbon, has to be done by public policy.
Public policy has to drive the debate. So another intersection that we seem to be failing at is the intersection between business, government, and civil society. So at Dow, sustainability is a business purpose. We have breakthrough challenges to world problems, like delivering food fresh, like delivering affordable water, like delivering breathable air. These are big world challenges that our scientists are directed at, okay, and the agricultural piece as well, which will become part of DuPont. Policies need to be developed that have these frameworks called long-term cost and price of ownership. Long-term cost and price of ownership is a long-term topic as well. Governments are equally culpable, to your point you made about private sector versus public sector companies. Are governments acting for the public good for the long term? And who's educating them on that?
What's the answer to that question?
Absolutely not. Governments are operating on short election cycles. So all of humanity's come to the short term, while good thinking intellectual bodies like academia and institutions are saying, hey, wait a second, there's a long-term problem here. So enterprises like ours, governments, like all the ones in this country, need to bring the long term to the table and get a value on nature. I'm all the way back to that point, to solve output issues like carbon in the air. Because until we put a price point on that, behaviors won't change.
So given that, since we ended on policy and then I'll open it up to questions, you got 2 choices out there in the presidential election.
You're going to ask that question?
I am. You've got Hillary Clinton, you've got Donald Trump. Which of those is most likely to get you to that, to the better solution for your company?
So I'm Australian. I can't vote in this country. So
that's
a cop-out. Look. Can I go a little soft on you here with the answer? This country, I'm an immigrant obviously, is amazing because of this great constitution that balances power. And I don't think it really matters at the end of the day which of these 2 get there because of the balancing act called the Constitution. And it works so that the worst case is neutral, okay, and the best case is optimism. If you don't kill the entrepreneurial spirit of this country and the freedom orientation of this country, then we will get from here to there with either of these 2. Okay, I know that's copping out as well.
No, but it's an encouraging answer.
Well, it has to be because, I mean, we've gotten here 7 years of huge regulatory burden. You know, we've had regulatory burden like no other administration we've ever seen for decades. We're still here. American business is profitable, is hiring, is innovating, and is developing solutions for the world. You know, so it's the Warren Buffett answer, if you like.
It's a good answer. Questions, comments?
Over there.
Yes, right here, please. And please identify yourself before the question.
Sure, Letitia Webster with the F Corporation. Thank you for this conversation, and it's really inspiring to hear your level of awareness around these issues as a CEO. My question is actually for both of you.
Uh-oh. I get to ask questions, not answer them.
It's how are we engaging all of the CEOs across the U.S. in these conversations? Because you're incredibly aware about this around these issues, but many aren't. And so what are you both doing to help heighten the knowledge and awareness and action?
Let me go first?
You go first.
Actually, Al and I were speaking about this in the green room prior to getting out here. I made these comments when I was sitting in part of the working group that developed the SDG 17 goals for the UN just this recent round, and we were critiquing what we were coming up with in the 17 goals, which are phenomenal and aspirational and all the right roadmap, if you like, and blueprint for what we all have got to do to find ourselves in those goals. But when we were talking about, well, what could go wrong, it's the heart of your question, which is, when I'm out there in the shareholder conversations, despite green investors existing, pretty much 1 in 20 might ask me a sustainability question, or what's good for 20, 30 years from now. It's your point on public versus private. The investor base has not responded. Okay, the shareholder base has not responded. I think the investor base has to say everything I just discussed about the value and nature to force CEOs and boards and management to be responsive to this. Now, until you get that, it really comes down to personal beliefs and passion. And I've had this, my 40 years at Dow, I've reinvented myself as CEO multiple times, but the understanding of long cycle versus short cycle decisions is something I'm very passionate about. And I've joined groups that are like this, and they do exist. But right now, it's handfuls of the Fortune 500. It's handfuls. So I think the pressure has to come from the owner base. And I do think it does become part of the conversation between short and long cycle investment, which is the other point you made.
So, and I'll be very brief, but we're doing a number of things. I'll mention three. One is we're convening conversations like this one, and appreciate the fact that all of you are taking part in it. The other is at Fortune, we have a lot of lists. Fortune 500 is based on size. We have fastest growing companies. We have best companies to work for. Last September, we started a new list called the Change the World list that focused on companies that are using the power of profit to address major social goals as part of their core strategy. And we'll be doing that again this year, and I think that's a big part of it. And then some of what we do is just report on what we hear from people like Andrew. You had Brendan Bechtel out here earlier. Very interesting. You know, I don't know if all of you know this, but for 3 decades, they wouldn't return our phone calls. They didn't. The last thing they wanted to do was talk to anybody in the press. And now they want to talk. Well, why is that? I've had the same conversation with 3 of the largest privately owned companies, most secretive companies in the country in the last year, and the answer each time is the same. We have to get our story out there primarily because of our employees, because of the battle for talent. We need to have a good story to tell because people want to work for companies that are doing good things in the world. Would you agree with that?
Well, definitely. We've got 53,000 employees, 25,000 of them we've hired in the last 5 years. 13,000 of them are millennials. By 2018, 17,000 will be millennials. We're not attracting them unless we do well, do good, do well is the same thing. Stakeholders, shareholder, community, customer, employee, the same. We're viewing all stakeholders as the same. Shareholders primary because it's their money, but shareholders need to be educated on why long-term cost of ownership matters, because you can be out of business, okay, if you have the wrong regulatory environment and you don't export the right values. When you go to Thailand and build a chemical plant there, you build it at the world's best standards, no matter where those standards are. You export standards. That's why trade agreements are so important, to export standards, to export values. And I think this is the way you actually answer the question of getting people's attention on which companies are worth investing in over the long term.
One last quick question. Anyone? Do we have one over here? The quickness, I put too much pressure on you. Okay, good. Thank you very much, Andrew. Really great,
no problem at all.
Inspiring conversation. Good to have you here. You want to use the last minute?
Yes, I just want to advertise Hugh Grant over there. He's right in the audience. And
you have any questions I should ask him? You're creating a company that's going to compete against him.
I said exporting standards is so important. Monsanto's got some of the best standards in the world in agriculture, and we've been aspirational as competitors against each other for a long time. Actually, Hugh, you can say it in your own words here later, but when I listen to Hugh talk about farm efficacy and food efficiency and supply chain efficiency, it's helped our company rise to those standards, and that's why the Dow-DuPont deal made enormous sense, to put together a company that can do what Monsanto does.
Great. We'll continue the conversation this afternoon. Thank you very much.
I'll look for the advertisement later, too.